a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Rivian, which is the hottest IPO of the year. And we are also talking about EV electric vehicle ETFs that will benefit from Rivian and also a lot from the recent bipartisan infrastructure bill. So let's start with Rivian. Rivian surged in its market debut last week, and it continues to rise today also. And last I checked, it has a market capitalization exceeding $118 billion. This is obviously less than Tesla's $1 trillion market capitalization, but far exceeds market capitalization of traditional automakers like GM and Ford. The startup is actually barely generating any revenue, and it has no earnings. It is still losing money, and according to Bloomberg, it is now the biggest U.S. company with no revenue. Now, Rivian produces a beautiful truck, an SUV, and they will also be producing vans for Amazon. And Amazon has been a big backer of the company. In fact, there was a great video of Jeff Bezos driving a Rivian truck when he went to the launch pad when he traveled to space. So Amazon has been a big backer, and in fact, this is Amazon's biggest investment in dollar terms. Now, it is very early to say whether this hype over Rivian is justified or not. We will have to see when they start delivering more vehicles and how the vehicles are accepted by the market. Now, Rivian is not the only hot startup this year. Lucid went public in late July through a SPAC merger. It is a company which is backed by Saudi Arabia's sovereign wealth fund. Lucid makes beautiful luxury cars, but they are very expensive, starting at $77,400. And the car, Lucid Air, has just been named Car of the Year by Motor Trend. And the market capitalization now exceeds $73 billion for Lucid. The company will be reporting earnings later today. And then we will get to know more about this company. Now, there has been a lot of focus on electric vehicles recently because EVs are a key focus of President Biden's climate agenda. And he recently signed an executive order calling for electric fuel cell and plug-in hybrid sales to account for 50% of all car sales and truck sales by 2030. And this is because because vehicular emission is a large part of the total greenhouse emissions. So that is why a key part of climate agenda. Now, the recently approved bipartisan infrastructure bill that has $7.5 billion for a network of electric vehicle chargers and another $7.5 billion for zero or low emission buses and ferries. Now, EVs are a small part of the current overall market, but their sales have been surging at a torrid pace. And over the next 2 decades, the sales will continue to rise rapidly because battery costs are coming down, and investors, consumers, liking for electric vehicles continues to rise. So that is why traditional auto companies like Ford, Volkswagen, GM, they are all trying to reinvent themselves as EV producers. And of course, there is search for the next Tesla, which is down a lot over the past week because CEO Elon Musk has sold a lot of shares reportedly for his tax bill. And according to the Wall Street Journal, this is one of the largest ever stock disposals by a CEO over a several day period. Now we'll take a look at two most popular EV ETFs, and we have discussed them recently, a few months back, so I'll not spend a lot of time on them, but I wanted to talk about them today because of Rivian and the infrastructure bill. So the most popular is by GlobalX. The ticker symbol is DRIV. It follows a modified market cap weighting scheme and has assets exceeding $1.2 billion, has an expense ratio of 68 basis points. You can learn more by going to the code page on Zacks.com, reading our research reports, articles, and going to the external homepage. You will see Tesla, NVIDIA, Microsoft, Google, and Qualcomm are the top holdings. Now, Rivian has not been included yet. It is very new, but it will be included at the time of next rebalancing in EV ETFs. The second one I wanted to mention is by iShares, IDRV. This follows a market cap weighting scheme, slightly cheaper, expense ratio 47 basis points, and slightly smaller to 526 million in assets. And you can go to iShares webpage to learn more about this ETF, and looks slightly different because AMD and NVIDIA, which are the major chip makers that supply to autonomous and electric vehicles, they occupy bigger weights than Tesla and other holdings. Apple, Toyota, and GM are among the other holdings in the ETF. So on the last slide, I have the comparative performance versus the S&P 500 index over the past year. And you will see that Tesla, despite its recent sell-off, is up more than 150% over the past year. S&P 500 index is up about 30%, and the two ETFs that we talked about are up between 45 and 55% over the past year. In full disclosure, I own Tesla in my personal portfolio. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.